All right, folks. Now, talking about the monthly power of three. We've mentioned before that the open and the close are fixed values, right? And the high and the low are the moving values, right? Monthly power of three, we look at it through the 4-hour time frame lens. Now, so this is Bitcoin, a recent move I'd called. We pull a fib, we look at the 50%, and this is going to be a blend of time and price, right? Because as we know, the famous picture, which is quite true, the picture which says price levels are useless until time is considered, and time is of no use unless price is at a key level, right? When you blend the two, of course, then you get a pretty good result. So now let's focus on the monthly, of catching the monthly range. Open is fixed, close is fixed, right? And we're trying to catch either the low or the high. So right now on Bitcoin, we were bullish. We were expecting it to be drawn to the higher time frame. And before I continue, let me just mark the draw on liquidity on the higher time frame, which is this monthly FVG. All right. So the magnet for us is up here, right? And the reason I've been more focused on Bitcoin, if you've noticed, is it was offering pretty clean. It had a pretty clean bias ever since down here. I've been calling for 32,000, right? So over here I said 32, over here I said 32, over here I said 32, and here as well. I'd kind of semi-slipped a bit, calling it here instead of here. But over here, I had demonstrated an important thing, which is sticking to your bias until it is invalidated, right? Which I'll speak about too. But the point is, the reason I'm focusing on Bitcoin so much is because the higher time frame is pretty obvious. The drawn liquidity is 32,000. We are looking to buy retracements until we reach 32,000, right? So, keeping the higher time frame draw liquidity in mind, we have opened a new candle on the monthly, right? And the previous month's candle has engulfed the month before it candle, right? But it never closed below the low. You've seen me emphasize, if you've been following me for a while, on the closes below lows and above highs, right? So this monthly candle closed as an engulfing candle. Replay. I'm clearly not used to this device or replay. I usually watch the data live. So this month closed, right? So pretty bearish, no? You would think, but no. The bias is up here. We're expecting this to be the magnet, if you will. It did not close below this low. If it had closed below the low, then you could start considering bearishness. But it refused to close below the candle, and it is bumping into a higher time frame key level, the FVG, and the inverted FVG as well, right? So there was no reason to be bearish. Now, of course, then you pull your fibs, you look at the premium discount, and this is where I delve into how to frame a trade idea on reading price, not trading. Because this is not financial advice. This is only price action reading for fun, right? So again, there's refusal to close below this low as well. The swing low that broke the high. Those are important key levels I've mentioned before, which is the lows that break the high or the highs that break the lows. Those are super important key levels when closed above or below, or falsely closed above or falsely closed below. And backtest that. Rewind what I said just now. Rewind it, listen to it once, twice, 3 times, and backtest it. So we have this important low. We have this key level, the IFVG. We have the old high as well, a classic SR flip price action. And this is where I called right over here. I'd call for Bitcoin to go to 32,000. First target is over here, and second target is up here. Now, what happened? We dug a bit deeper before eventually rallying to the targets, which was 1 and then eventually 2 coming soon, right? How would you frame a trade idea? You want to first have an eye on the target, right? So my eye was up here. So the first thing you want is a draw on liquidity. This is how you frame the bias. I had given out a tweet in written form, but I think a video form is a lot more useful. So number 1 is, where's price? What's the magnet? Where do you think price is going to be drawn to? Either up or down, right? Second of all, what potential entry points do you see? Right? Third of all, what is the opposing end, or what is the other side of the draw on liquidity, which you are considering in your assessment highly unlikely to be reached before the draw on liquidity? Let me say that again. What's the point in price which is highly unlikely to be reached before the draw on liquidity is reached? Right? That is your invalidation level. So, right over here, we had number 1, which is, where is price likely to be going to? 32,000. That's the I. What is a potential entry? over here was considered, over here was considered. These were the two entries given, right? What is a place you deem unlikely to be tapped before the target? This liquidity pool, highly unlikely to be tapped before the drawn liquidity, especially given that it is a 0.618 fib and we are in an uptrending market, tapping into the 50% Fibonacci level. Right, so this was reasonable stop loss for the idea to frame the bias that we are going to be rising up there. So this is one. Where is the drawn liquidity? Number two, what is the entry? 50%. Below this low, add the 50%. The old high, the monthly, remember, the monthly FVG, the monthly IFVG, week 2 of the month, right? Which I'll be getting into right now. And number 3 is which point in price is unlikely to be reached before the drawn liquidity invalidation, right? And that is how a trade idea is birthed, right? It's funny using the RR tool, but this is all called in real time, right? If you had picked this, the low of the FVG, then sure, it would be shittier risk to reward, but you would still be correct, right? Now, this alone is enough. However, there is an important aspect, which is the divisions of each candle. Each candle is divided into 3, or you can say divided into 4 as well. I like to use 3 on the daily candle and the weekly. And I like to use 4 on the monthly candle. In fact, you can use this dissection of any higher time frame candle as a 3 candle process. So you don't need any more than 3 candles to trade, right? You can trade this candle. You can choose 1 candle at a key level, 1 candle at a key level. 1, 2, 3. 1, 2. That's your whole trade, right? And things are getting close to be interesting very soon. So, keeping that in mind, we have the monthly candles power of 3, the monthly open, high, low, and close. The monthly candle is closed as a bearish candle. In a bullish market, in a clearly, obviously bullish market, disrespecting bearish PD rays, respecting bullish PD rays, in a bullish market, a bearish candle is going to be engulfed in the next candle. In a bearish market, a bullish candle is anticipated to be engulfed in the next few candles, right? Retracement, protraction, expansion. Expansion, protraction, expansion, right? So this bearish candle, we're expecting a higher time frame, remember? So this alone is a trade. Keeping in mind the order flow, the narrative, the whole context of the move, you're trading 1, 2, 3 candle number 1, candle number 2, and candle number 3. Right? From the lens of power of 3, you go to June, you go to the open, you want to buy. Again, what were the rules? The rules were buying below the opening price when bullish and above the opening price when bearish into a higher time frame key level. Blend that with what I said just now of how to frame a trade idea. And you get a pretty accurate read on price. Right? So below, we're forming a range. We're forming a range below the opening price. We're breaking out of the range. This is all a wick entry. What does that mean? What does wick mean? We always say enter with a wick, right? What is the meaning of entering in the wick? It is simply entering below the opening price when bullish, entering below the above the opening price when bearish. All the order blocks, all the breakers, all the OTEs, everything is happening over here, and you're writing it back into the opening price and potentially a flip of the opening price and a continuation lower. Right? This is how you get the wick entry. Same over here. Open, decline into key level. This is all happening below the opening price. Right? You're waiting for the order block, the range, the breaker, the OT to form below the opening price at the certain time required, and you write it up. And you entered from the wick of the candle, right? Not to stray too much, but in summary, opening price fixed, closing price, opening time, fixed, and closing time is fixed, right? The previous candle was a bearish candle in an uptrend. Bearish candles and uptrends are to be engulfed. We've reached a key level, right? So we are at a key level. The narrative, the context, everything is in aid of a push higher. Blending that with the opening price, we're bullish, right? What do we say? A candle opens, we dump, we create a range below the opening price. We then break the range below the opening price, and we rally. That's cool, but here's a question. How do you make sure that you weren't tricked into this being the bottom, right? You could have well and easily done that. You could have bought here, turtle soup, right? And then you could have been suckered in and stopped out before the move. That is possible. That can be avoided by two ways. Number one, always wait for the confirmation of the high being broken, right? Whether it's the opening price being flipped or it's the high that broke the low being flipped, all right? Or you can simply wait for the sections of the candle to play out as they're supposed to be. As I mentioned before, you got 1, 2, 3. Accumulation, wait for week 1 to accumulate, week 2 to manipulate, and then week 3 you're looking for buys. Right? Accumulation, manipulation, distribution. Let's see what that looks like. Week 1 is done. Week 2, accumulation, manipulation, distribution. Right? So again, you're noticing I'm switching back and forth through 2 time frames, and that is super important. The higher time frame to give me a draw on liquidity, a magnet, and the lower time frame to find the entry patterns, quote unquote. Right? Now, the time has come. The time has come for me to show an even deeper understanding of this accumulation, manipulation, distribution, which I just mentioned. The higher time frame candle being divided into sections, right? And you can use any 3 of them: accumulation, manipulation, distribution. You can go back to the video, the previous, not this one, the one before it, right? Not the one before this one, the one before this one, right? Where I talked about the 2 ways this can play out. But the basic premise is an accumulation candle, a manipulation candle, and then candle number 3. You want to ride the wave of the candle back to the high of the candle that was turtle souped. Let's take a break, and we will get into a nuance, a detail, which I haven't really mentioned before, but let's mention it now. Let me just take a break, a couple of minutes, and I'll be back. So I'm going to stop the recording right now and leave you on suspense mode.